I'm passionate about sharing the experiences, lessons for a lot of startup founders, other partners, in the network and beyond. I am CMC Labs and Launch ecosystem manager. I work with startups all day, every day, filtering the best founding teams, the most innovative products, onboarding them to the program, and, doing a bit of portfolio management, helping them with partnerships and fundraising, various opportunity discoveries. I've learned a lot about technology, about what it takes to be a founder, what it takes to run a company. It really fascinated me, figured out, how to evaluate startups, how to start from scratch, what's the actual due diligence, how to talk with founders, how to talk with investors. We were an investor ourselves. That's also hard. You need quality deal flow, you need quality connections, you need to make your name known in the industry as well. If you want the best opportunities and the best founding teams, they might not want you. So I founded my own startup. It was called the VC Whisperer. It was really decentralizing the knowledge. It was really about expanding the bubble. I started working with even more startups and investment firms, and it became this ecosystem of its own. I could help a lot of founders with those connections, with that advisory, with that hands-on support. And it was a very interesting experience. I ran the VC Whisperer for a couple of years. I decided to join CMC, CoinMarketCap. I've worked with a lot of projects, jump on calls, do due diligence, review quarterly and monthly updates, help our own portfolio, in this kind of portfolio management role as well. Sitting down with the head of Animoca Brands or Multicoin Capital, other really big VC firms in the industry, I've learned so much. CMC is a token data platform. We aggregate majority of tokens that are launched in the ecosystem. We aggregate, the startups that are launching those tokens. CMC AI has been released in 2025. AI crypto strategist that helps you review the content, that teaches you, of why that coin was up that day and that was down. CMC 20 and CMC 100, which are liquid trading indexes. CMC has like 70 million monthly active users. We have the biggest market share. Right now we have two tiers. There's a free tier and CMC priority, which is a fast track. I have all the right forms, all the right contacts. If you do need some more information or, access to those forms, feel free to reach out to me directly. The biggest mistake is really following the same blueprints within the industry. That's just the nature of us as humans. We see someone being successful, we want to copy them to be successful ourselves. We're really missing the key model of business from the Web2 world. We have so many profitable businesses, that are so happy to build within their own niche, to sustain their employees, to make revenues, issue the quality work that they're supposed to do. In Web3, we all want to be the unicorns. It used to be so much easier to get successful, to make more money, experiment, and then see what works out. A lot of startups, a lot of businesses in crypto, they try to overachieve, burned and crashed down. Honestly, we really undervalue the bootstrapping effect, the early revenues effect, the fact that you didn't need external money to get to the paying customers, to get to the utility of your product. It's really miraculous. It really shows the product market fit. We think if we raise VC money, we're gonna scale more, we're gonna get all this networking effect, we're gonna get so much added value. And some VCs do that, but a lot of the time it's purely for capital. Founders really forget that VCs are in it for themselves. Their goal is to make money. Their goal is to maximize their ROI. A lot of founders are quite naive. They manage to sell their idea and these VCs bought it. They're gonna be there for the long run. If they see a way to scale it faster and make more money, they will do that. Do you see the trend going upwards of more bootstrapped founders? There is no secret sauce for anything anymore. Centralized exchanges are not gonna help you be successful. Market makers are not gonna help you be successful. You need to experiment, find new ways, or just do it on your own. It's gonna be maybe harder. It's gonna take more time. More gritty founders will survive and more quality products will survive as well. CMC Labs is more for mid-maturity projects, teams that already have built a product, at least minimal viable product. CMC Launch, on the other hand, is a program for a later stage project. So those projects, that being the front runner. And overall, like both programs, they're very marketing focused. 80% of CMC employees as a whole are developers. They build out Community Quest, which allows for both on-chain and off-chain activities. Everything we do with CMC Labs or CMC Launch, it is targeted towards our CMC audience. The teams we work with, they are building products that do need capital to scale. We have a vast VC network, vast service provider network, vast ecosystem network where we can connect our teams with those right investors, service providers, overall partners. Overall, CMC Labs is very sector and chain agnostic. Requirements are post-MVP product, initial user base, innovative product. We want something unique. We want a new solution and not a solution, that you tweak the existing one and hey, this is a whole new product. Like that's not gonna sway us at all. If we look at 2020, 2021. There was a lot of excitement, both from the VC side of things and also retail. There was a lot of money floating around. We were more opportunistic. We were willing to throw money at simple decks and no products. We were willing to expect things and not to have any kind of proof backing it already. Startups like really take off and raise millions and hundreds of millions. Right now, it's much harder to raise. VCs are already expecting some social media presence, some traction in terms of whitelist or testnet users, some, very clear technical and roadmap guidelines. The founders need to do more work and more research. Being an entrepreneur has become this kind of maybe I can do it tomorrow, and it's not a risk at all. Whereas in reality, it's supposed to be this high risk endeavor. The amount of startups fundraising is insane. The differentiation point becomes so much more difficult to achieve. VCs have also dried up. Less LPs are willing to put in money in the VC model. VCs just, I think physically they really can't reach 10x or 100x, obviously, like at these times at all. More startups fundraising and less people willing to give them money. VCs also pivot to liquid deals, to OTC deals, really looking into later stages of projects. It also pushes the ballpark much further when you start a business. Just because of these changes happening internally in the VC world, and obviously the scale of startups that is rising, that has changed the dynamics quite a bit.
We have way too many startups who actually developed products which are not related to real life use cases. Projects we build something which has no real use case. We can use blockchain to really help companies in Web2 to solve real life problems. All those NFTs, as you said, meme tokens, it's just temporary stuff which is going to have zero value in the long term.
In the next 5 years, we're gonna really see substantial shift to blockchain not necessarily being the sparkle, on the surface, but something that runs underground. There are so many use cases for blockchain. As a young industry, we want blockchain everywhere. We want crypto and Web3 and, everybody screaming how amazing this is and how we all want to use it. If we manage to get the blockchain technology being used underneath the Web2 cycles, firms that run the world basically, I think that would be such a big win already for the industry as a whole. We started as these decentralization rebels, and now we're, growing up and becoming more realistic. And maybe Web2 is not that bad. There are just some things that we can improve with the technology that we have built. The token was always supposed to be an additional value. All want the token. Once the token launches, it becomes the main product. Nobody cares about the actual product. If the token fails, the company has failed. If we do manage to stay away from the tokens as much as possible, it will create a bit more of a healthy ecosystem as a whole. 90% of the tokens shouldn't exist, because the token side of things, it has created very bad loops. It has created very bad experiences that even the founders that are trying to do it right and are taking the longer route, they're still struggling so much.
I believe that majority of people learn their lessons, and it's going to be so many nice and positive changes also in that market. The venture capital, we understood that it's not a good strategy anymore to invest into the tokens because we are not actually performing very well. There is no real value behind it. Companies who actually will be focused to real life use cases, we're going to win in the long term.
The team really needs to be polished, well positioned, both with the previous experiences that they have. If it's a second, third time founder, you're more willing to trust them. So the team always comes first. Then I think just purely where the product is and where does it stand in the competitive landscape, how you're able to differentiate it, how much will it take to fully launch it, how capable will it be, is this the good market for something like that being built, how many of the competitors are also building something like that, if it's a new sphere, how much of new ones can we expect? What can you offer to your partners and what can your partners offer to you? The product integrations, the co-marketing campaigns, the tapping into each other's networks, and that opportunity discovery is very, very important.
If you're going to build a product which is not needed in the market and actually nobody wants it, so you cannot perform very well as a company because there is no business here. Seasonality of a business in crypto space, as you know, whereas like bull run, bear market, and all the cycles repeats again and again. Companies somehow need to find the strategy how to survive those seasonalities, let's say, in the business, in this specific industry.
99.9% of the time, you won't get the capital if you don't have any of the network value. You need to showcase that you have the right tools and the right people and the right partners to get to the next level. Web3 is much more intricate and much more relationship based than Web2. Things move much faster in Web3. You need to have the threshold of the network to back you up. If you're a startup founder, you're building something new, or you're thinking about building something new, I think the best advice that I've seen out there is to really start building those relationships, make them memorable. All the VCs have people coming to them all the time. Hey, read my blurb, view my deck. I want you to invest that amount. If you do that right, I think building those relationships way before the fundraising can be so helpful. We've had founders that raised, as nobodies, right, millions of dollars, but that's not gonna happen to vast majority of the founders. So you need to do the work, you need to do the research, you need to know who you're targeting, who would make sense for you. Research is so underrated in the industry. You need to be prepared for everything, and that's why meeting these investors in conferences, you have like 5 minutes of their time to make an impression, to make them remember you from thousands of faces every day. If you're ready, if you're researched, if you know what you're talking about and where you stand, it can really make a big difference.
The majority of startups right now, we're just forgetting to invest time and effort. In most of the cases, it's like a so superficial approach that investors basically don't know who you are and what you want from them.
Trust and recognition are everything, and it's much harder work to do it right. And that's why we have a lot of startup founders that are not really doing it right. Try to, accelerate the process. They try to find the shortcut. Really consider and research if your startup idea is worthwhile. It's so easy for us to become these entrepreneurs and start our startup journeys. It needs to be a net benefit overall for you, for the partners, for the industry as a whole. If more people did more research on what's being built in the industry, what competitors they already have, what kind of narratives people are interested, and what's happening in the industry overall, a lot of these teams wouldn't start the work because it's hard, it's dreading, it's expensive, both with human and financial capital. Be sure to be mindful of, yourselves and everybody else's around you time and capital.